We are live, ladies and gentlemen of the crypto space. It is Wednesday, August 5th, 2020. Is it still 2020? Are we still in this year? It's kind of like March started off a year that we want to forget. So many things just cascading ridiculousness. Still well into a pandemic. I don't go outside. I have no interest in getting sick. I don't care what anyone thinks of my choice. Let's pop it over to the main screen and let's get this party started. Who's in the stream? We got Digibiter Just Nibble in the house. What's up, man? Captain Weber, my man, always a pleasure. A little rain over here. Yes, I haven't looked outside. It's probably raining. It's summertime in Florida. 3 o'clock, thunderstorms. That's the name of the game. What else? So I'm expecting rain too. That's the way it is. It's like a clock. It's afternoon. It's Florida. It's raining. But bear in mind, so like I'm a little further south than you, so it might be raining where you are, but it's not raining here. You go 5 minutes south of me and it's raining. Because on one side of the house in Florida it's raining, on the other side of the house it's not raining. Anyway, I'm digressing too much. Good to have another Florida brother in the house. Julie Young's in the house. What's up? All right, so we got some interesting stuff we're going to talk about today. And I want to go over to the headlines because, for the last couple of weeks, we've been talking about crypto assets. And, and I tell you guys my opinion of equities that they're not touchable. I don't, I'm not going to touch something with a P&E of 50. I'm not going to touch something with a P&E of 30. I'm not. To me, that's the most absurd type of investment imaginable. Now, bear in mind, from a trading perspective, who gives a crap about a P&E? Which just means the fundamentals are completely dead in the equities markets, and it's just a disturbing trading environment. Now, for me, here's the interesting thing. From a trading perspective, I much rather trade crypto because it is my asset in my possession. I don't have a brokerage. I don't have a Fidelity. I don't have an E-Trade or whatever the heck it is holding my assets. I have no trust in these companies. It's not even about, fine, Fidelity and the big names, they're brokered. That's their whole job is custody. But if we can avoid custody and not have someone else holding our assets, why not do it? What's the point in someone else taking responsibility for you? I want to take responsibility for me. This is my life. It's my responsibility, my security, my asset management, my asset holding. Why am I giving that to someone else? It's the same thing with a bank. It's even worse with banks because banks are lending your money. So banks are making money with your money. At least with a brokerage house, they have to ask you permission if you want to sell your allow your shares to be used for short selling. So they actually have to ask you permission. With a bank, they don't ask you permission. There's zero. Um, they have zero reserves. So banks don't have to ask you permission to lend out your money. So as I said, at least brokerage houses have to ask you permission to use your shares for short selling. So the banks are ridiculous for keeping money in banks. Craig's in the house. Yo, yo. All right, so private payroll growth. So, yeah, it was like 160 something thousand private payroll jobs increase, whereas the month before was like a couple of mil. I didn't even want to pull up the story. The whole point being, nobody knows what's going on, and everyone has all this optimism. And it's not that I'm pessimistic, but I'm realistic. And what do I know? I know that trends play out. And even if we had a million jobs gained this month, the trend is bearish. And unless you have a critical mass event, the trend will be bearish. And what is a critical mass event? With regard to this pandemic, all of a sudden something significant happens, like all of a sudden I don't know. I can't even think about what a critical mass event that's going to turn around this shitstorm. Because that's what this is. It's a shitstorm of a bearish trend. If you plot anything of the macro of what's going on, with the financial system, the job situation. Uh, it's bearish. It's all bearish. So it's not that I'm negative, that I and I hope that it's somehow going to work, but there's no way any of this is going to work. The only thing that the Fed has in its toolkit, as they love to say, as Powell says, we're going to use everything in our toolkit, is printing. Oh, what is this printing? They have jack shit in their toolkit, these idiots. At least say something that resonates with moderately intelligent people. Like, we're going to use the only thing that we possibly have in our toolkit, which is printing. And I'll be like, well, yeah, Powell, that kind of makes sense because that's the only fucking thing you have in your toolkit. You can't do anything else. There's nothing else you can do. It's like, all right, we're going to print money and figure out a way to give it to a bunch of people. That's what they did with the swap lines. They're giving basically free loans that could be rolled over and rolled over and rolled over to countries around the world. It's like, there's nothing, it's so bearish. Like, listen, they have a swap line with the European Union. So, U.S. gets euros, Europeans get dollars. What is that facilitating? That's facilitating the bailout of Airbus. So, literally, the United States is facilitating credit and life support to companies that are competitive with U.S. companies. Boeing. And we're bailing out Boeing. So we're bailing out Boeing and we're bailing out Airbus vis-a-vis the swap lines. This is the most pathetic, ridiculous situation I could possibly imagine. And you know what? Kramer said a good thing the other day. He said, what do you expect them to do? Just let the whole system collapse? Now, that brings up a valid point. What am I supposed to say? Am I supposed to say, sure, they're supposed to let the whole system collapse? I don't know. All I know is they're going to be ridiculed either way. If what they're doing right now is just ridiculable, it's just deplorable. It's ridiculous in all regards. But if they did nothing, then they would be scolded for these boys did nothing and they let the system collapse. So frankly, I'll give Powell and Minucci Bucci the credit in that regard because they're screwed either way. They're going to get the shit end of the stick either way. They're going to get ridiculed either way. Craig said airlines setting up for a layoff around 75,000. So basically the airlines traveling. So many companies around this country have such thin profit margins. Now, clearly restaurants have probably the thinnest. Airlines have massive expenses besides payroll, all the equipment, all the expenses associated with hardware and maintenance requirements of a massive fleet, billions and billions of dollars. It's disrupted, which means it's inevitable that we're going to see airline consolidation, if not downright bankruptcy and liquidation, because we don't need as much air travel. We don't. No, there's been a disruption in travel requirements. And the same thing is going to happen for mass transportation, subways, buses, interstate Amtrak. What is it? And New York subways are probably going to go bankrupt unless they get a couple billion. Amtrak is probably gone. They'll probably go through bankruptcy, and we'll see what happens with how they come out the other side. So, I bring up this topic today. We're 9 minutes in. Because this is what we have to understand to make choices with regard to our own portfolios. With regard to when you log into Fidelity, what are you choosing? When you there's no login. When you go to 1inch.exchange with your ledger, what are you choosing? When you go to CoinGecko, what are you choosing based on the information that you see? That's all we have is a choice. To do something or to not do something. To either click a button or not click a button, because that's really what it is. So we need to make choices based on information. And this information that I see is basically this. Here's the story. This is the story, gold. This is called fear. Now, bear in mind, look at the DXY. Wow, nice pop down, 92.66. So it was at 93.6. It's down a dollar overnight. 93.6. Well, down, however this is measured by points or whatever. But the point is 93.6, 92.6 overnight. So this is going to keep going down, especially considering the headlines of what Powell says he needs. So there's the Chapwood index. Chapwood index measures real inflation. And anyone who says otherwise has no idea or is simply just not a rational human being. So the Chapwood index measures inflation based on where's the list? Approach, technical, and Chapwood index items here. So the Chapwood index measures inflation based on the change in price year over year of these items, and it's all normal shit, including sweet peas. Dry cleaning, tennis balls, T-bone steak, McDonald's hamburger. So this is like real life. It's like, hello, real life. You'd think the Fed would actually use something in real life. No. They have this stupid CPI. And the Fed measures inflation at it's way less than 2%. So obviously, real life, we're New York. It's double digits. And I would love to see Florida because that's where I live. Can I search? Yes, I can search. Well, I want to see Florida. All right. Miami. Okay, there you go. So 10%. Captain Weber, we're screwed. We got 10% inflation, and this schmuck in the Fed is talking about we're struggling to get the CPI to 2%. We're struggling to meet inflationary targets at 2%. So that's what his goal is. So this boy's going to have to ramp money production because that's how you ramp inflation. They're going to get the Treasury to print. They're going to get Manucci Bucci to print a couple of hundred billion, if not a couple trillion, and they're going to 10-to-1 leverage it at the Fed, and they're going to get it out into the real economy. The real economy is literally the general public. It's not like the banks or was it the primary dealers or lending money to corporations for 0% interest. It's literally the people, and this is how you're going to get inflation to really start moving. And the reason they need inflation is because right now, globally, there is a deflationary implosion. Then that's exactly why they had swap lines, and there's over $250 billion of debt out there. So there's only one direction for all that debt to head when there's a systemic disruption to supply and demand. It's deflation. So the only way to counter deflation is inflation, which is basically the printing of money. So the printing of money also destroys purchasing power, which is exactly what's happening. I got reamed on Twitter, maybe a couple of weeks ago when I said the stock market equities going through the roof is the destruction of U.S. dollar purchasing power. And I'm like, it's a philosophical concept. Now, they broke out an article or a series of educational pieces from Institution about the philosophy of economics. And I'm like, all right, great. The point being, if it takes $10 to buy a share, and then tomorrow it takes $20 to buy a share, your dollars are now worth half as much. Isn't that kind of obvious? It's now costing you twice as much dollars to buy the same quantity of shares. The purchasing power of the dollar has been destroyed with regard to equities. So, in my mind, there's no real argument against that statement. It's a very rational, straightforward statement. Now, the same thing is actually occurring with gold. So, anything that's appreciating relative to dollars is means the dollar is weakening. Its purchasing power is being destroyed. So it's now costing more dollars to buy gold. And that is what is happening with the printing. And Powell wants Congress is going to print another trillion and start sending everyone another miraculous $1,200 check. Like that's going to fix people's several $1,000s worth of back rent that they owe. And there's such a horrible spiral effect that's playing out. So nobody's been paying rent. And something like 50% of renters haven't paid. And mortgages as well. So they don't have jobs. So even when the rent forbearance and the mortgage forbearance is lifted, the moratorium on evictions, rather, nobody has money to pay the back rent. So that means the landlords don't have money to pay property tax, or the mortgage management company doesn't have the money to pay for the servicing of the debt, the interest that is owed on the mortgages to the bond, the holders, to the equity, or the equity holders, the people that get the interest that mortgage holders pay on their debt. So what is that? This is such a spiral of how do you? There's no fix to this. You can tell people to not pay rent, but then who's going to pay the mortgage payment? And so we're going to have just there's an unknown wave of bankruptcies and mortgage implosion and evictions, which lead to no property tax being paid, which lead to mortgage defaults. And this is yet to play out. You see tidbits of it on the news, tidbits. And clearly, if you watch Raoul Pal, you see much more of it on Real Vision. I mean, this is better news than anything, Real Vision. This is where you see real information, realvision.com. It's a brilliant people. He has the most brilliant people come on this show. And himself is brilliant. So, 12:16, halfway through my stream, and all I did was complain. I'm a complainer. Can't wait for the printer to go burr when a loaf of bread costs $100. Yep. So how about that? So the whole point is we need to have our value, our store of value out of dollars. You keep enough dollars don't store value anymore. With all of these assets going up, if you're just holding dollars, you're getting screwed. So the name of the game is to get out of dollars. And what do you put it in? You want to put it in stuff that's appreciating relative to dollars and not depreciating. And when something, and if something is depreciating, you want to get it back into dollars. And that's the whole point of trading. And that's how trading works. You want to protect your gains and minimize your losses and maximize your gains. So, you can't just move everything out of dollars because dollars is a vehicle for payment. It's not money. Dollars is not money. The definition of money is a payment vehicle as well as a store of value. But dollars are not a store of value any rational in any rational description at all. It's not a store of value. The dollars are not money. Put that on headline news, CNBC. Dollars are no longer meet the definition of store of value. That'll be the day. So you need dollars because you got to pay bills. But excess dollars is a wasted opportunity because every dollar you have and every day that goes by and the gold keeps going through the roof and the DXY keeps getting destroyed, your dollars are you're wasting money. You're wasting value. Who cares about numbers in a bank account? There's the value of those numbers, of how much purchasing power you have that count. I mean, when you got charts that look like this, look at this BNT chart. Ooh, look at that, 18% rip today. Yeah, you got a 15% rip. Quant. I've been tempted to look at Quant. I don't know what Trovalla is, but ooh, band protocol. Look at you up there in the charts today. Hmm. This is the Cosmos Hub, which means that's cool. I'm looking forward to Polkadot catching some more traction. Synthetics, another one that I hold. Kyber, another one that I hold. What else? What do we got? Here, Cosmos. That's a nice 5% rip. Ooh, not going to complain. Kusama. Need more traction for Polkadot, not just their Canary network. Anything else? All right. Algorand. Hi, Digi. Hello, Digi. I follow you. You're still in your symmetric triangle. My goodness. This is going to be a beast in a couple of weeks or months. Craig says, dude must have thought Keynesian economics was the lone singular economic model. No, no. Oh, yeah. Whatever he thinks, I don't care what Powell or Minucci Bucci or the president or anyone thinks. All I know is this is crazy. Now, I know I'm relatively young. I'm 37 years old, so I wasn't around really. I wasn't financially conscious in 2000. I was financially immature in 2008. And dare we bring back times in the 80s? I've not been around for many of those events, but from what I'm seeing and what Raoul says, this is the most disruptive, systemic shock in the financial world in history. And I wouldn't take what he says lightly. I think that we need to prepare for the worst and hope for the best. And all I know is if Powell says he's going to ramp inflation, that means the value of the dollar is going to go down. And what do we know now? We now know the value of the dollar is inversely correlated to gold and inversely correlated to Bitcoin, which means the dollar is inversely correlated to crypto as a whole. So as the dollar goes down, crypto is going to rip. And if they're going to print trillions, the dollar is going to go down, down, down. Now, where are we? Let's look at the big picture. Let's pop it out to the weekly because this thing moves like a freaking turtle. So, next up support is probably the 88s. And then we're going to hit the 79s. And then we're going to hit the 72s. And that's all the DXY goes back historically for lows. So can you imagine if this thing gives look at this rip. Damn, back in 2000. That's a heck of destructive event. And then 87, 86, 85, 86. These are the destructive events for the dollar. And Powell says he wants to stoke inflation. What do you think inflation is going to do? It's going to destroy the purchasing power of the dollar relative to other fiat. It's going to get it to be a weak currency, which makes us great for trade, which means dollars are cheap relative to other countries. That means other countries get to purchase a lot of dollars for their fiat. So the whole fiat FX system is really, really annoying. Let's get out of the Stone Ages, people. Let's get onto a global monetary system already, guys. Working on some 1800s money, 1500s money systems. It's getting pathetic at this point. We still have paper dollars. Amateurs. Amateur hour. Now, who's not amateur hour? The OCC, Brian Brooks. That is not amateur hour. That is a forward-thinking person. The Fed and the Treasury is amateur hour because there's no big thinkers in government. It's like, where's the revolution? Where's the crazy new awesome technology which is staring everyone right in the face? And there's Tom Emmer talks about it. There's a Republican in Minnesota. Very, he pretty much heads the blockchain caucus, if that's what they call it, in Congress. There's a couple of people out there that have good interest, good intent, and are trying. Craig says, but yeah, debasing currency has never worked in the history of the world. It has never worked in the history of the world. This chart will go down, and when this chart goes down, gold, this is why all the gold bugs are talking 8, 9, 10, 11, 12, $15,000 ounces of gold. James Rickards. Jimmy Rickards expects to see 15,000 an ounce of gold. 15,000 an ounce of gold, and I don't need to work much. Oh, can StakeNet DEX replace Forex? No, but synthetics can replace Forex. Synthetics literally just goes up. It is the most incredible asset. I made a lot of gains, hundreds of percent gains, starting at 70 cents, and I think I sold at $2.83, $3. But this thing just goes up. SNX, BTC, Binance. Let's see if there's anything. No. We want SNX, ETH on KuCoin. Yeah. I mean, this thing just goes up. It just goes up. It's at what is Synthetics at? Synthetics is at $4.63. Can you imagine putting 100 grand into Synthetics at 70 cents? And you have is that like 600 grand right now? Oh my gosh! So someone did. It wasn't me, but someone did. Oh, this thing just goes up. So watch the chart, as I've told everyone the appropriate procedure. and tactics. Protect your gains. Be be picky on buying and be easy to sell. Protect your gains, and you have to buy and you have to see. You have to experience what it's like to get in and get out at different times, and you have to learn. That's the only way to protect, or at least position yourself optimally for this insanity that is playing out with Powell and Minucci Bucci at the Treasury, and our real inflation that's occurring compared to the imaginary inflation that Powell wants to see in the CPI. And and what's even worse, we got 4 minutes left. The worst part of what's going on is I would imagine a lot of you folks that are listening to me are still working in some regard. And I personally am working. I have a lot of survivor's guilt because I feel bad for a lot of people. There's a lot of stories out there, a lot of horror stories about people that aren't working and what that's like and how devastating to morale and self-esteem that is. We're going through a very rough time. So, and that's what's so disturbing about looking at these numbers up here. There's people that are sad and depressed, and it is miserable to be out of work, to have two kids. You're not getting evicted because there's a moratorium on eviction, but you haven't paid rent in 4 months. You're literally living on food stamps or EBTs or whatever they're giving you to pay for food for one, two, three kids, and God knows what else is going on in people's lives, and this is just straight up miserable because the richest people, including people on this stream, making money off the crypto, making money off the stock market. You got gold. If you got gold miners right about now, you got gold miners. All I know is I see 20, 30% gains in my Fidelity portfolio and my IRAs. So the people that have money are making money, and then the people that are working on dollars that know nothing of investing, they get a paycheck, they spend their paycheck every month, they go paycheck to paycheck, they know nothing other than dollars, and those are the people that you got to feel for right now. And it is heartbreaking contemplating what their emotional state is. Well, meanwhile, this shit is going on. The Nasdaq going through the roof. The Robin Hood heroes making money. No, no, having no idea what they're doing, have no idea what they're participating in. The inflation, buying Hertz and making money, a bankrupt company and making money. It's the most ridiculous. There is no way to rationally digest what has played out over the last couple months. It's absolutely crazy. Nathan did mention StakeNet. So StakeNet's not going to replace Forex, but StakeNet has Raiden Network and Lightning Network, and StakeNet, the DEX, is a hell of a DEX. BlockNet's DEX is a hell of a DEX. Bancor, Uniswap, Kyber are serious DEXs. Balancers, these are serious DEXs. Now you bring them all together, and that's how you disrupt Fidelity. Throw in synthetics with some protection and scale, and you have synthetic assets talking about fiat, talking about FX, synthetic assets representing actual stocks. And what the heck do you need the New York Stock Exchange anymore? Now all the New York Stock Exchange is a damn Oracle node. Can you imagine the New York Stock Exchange reduced to Chainlink node? Reduced to band or teller node. And that's really what it is. You don't need all that garbage infrastructure anymore because now it's decentralized, running on people's computers around the world, requiring no servers, no hardware, no building, no office, no HR. All you need is developers and auditors and smart contracts. And the whole world is changing. The whole world is moving so away from manual labor. I got a minute left. Look, you think McDonald's is going to keep hiring? No, McDonald's is going to start looking for robotics firms to automate the entire process and get rid of the entire HR department. And all they're going to do is have developers writing code and engineers maintaining hardware. And robots are working 24 hours a day that require no health insurance, no life insurance, no benefits. They never complain about pay. They get zero pay, and they're working 24 hours a day. So if people don't see what's playing out with regard to employment And this is the time, this is the critical mass event that's going to trigger it. Because as of right now, companies need to save money in order to stay alive. So they're going to look at all of these technologies and be like, we could save how much money by replacing our staff by robots? $100 million a year by 2025? You bet your bottom dollar that that's what's going to happen in the next 5, 10, 15 years. Because these companies need to save those hundreds of millions of dollars in order to look appealing to their shareholders and all that ridiculous equities market fundamentals, technically. So, all right, that's fine. There's a little bit of fundamentals. If a company comes out and says they're going to save $100 million over the next 5 years, that's pretty bullish fundamental. Meanwhile, their PE&E is operating at 100 to 1, so that's ridiculous technical. Fucking companies running around at P&Es of 100 to 1. How ridiculous is that? Craig says, lost both of my jobs in March. They ain't coming back. Tons of people in the same boat, but I'm just pivoting and moving. Listen, you got hustlers out there. God bless you. I wish you the best. And it's heartbreaking. I what is it? Survivor's Guild. I feel it every day, man. I live in a little bubble. I write apps. I write Android apps for companies, and literally, there's so many jobs. I don't know. It's miserable. Pretty upsetting to myself. I wish you the best. I wish everyone for the best. I thank everyone for joining me. It's 12:31 on a Wednesday, August 5th. And this is my favorite time of the day where I get to talk my mind, talk about the topics that I think about for myself and that other folks are interested in. And I very much enjoy this time. I thank you everyone for joining me on a daily basis, and I will have more to talk about tomorrow. You all have a wonderful day now. Peace.